Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up 1.3%. In contrast, the Canadian stock market was down 0.7%. Last week, we did see a couple key companies coming out with their earnings. Amazon and Apple coming up short of their earnings expectations, according to analysts, and also warning about supply chain issues as well, which has become one of the dominant themes in the media recently. On Thursday, we did see the advanced Q3 GDP report being released. It came in with an annual growth rate of 2%. Versus an expected 2.7%. What was interesting, though, is how investors reacted to that report, because what we saw was slower growth, and yet the stock market went up. So investors were really surmising that the bad news of slower growth was good news for the stock market, as the Federal Reserve might remain more dovish in the near future. This week, we do see the Federal Reserve come up with its much-anticipated meeting, and on Wednesday, it's expected the Federal Reserve will make an announcement after its meeting. And a lot of investors are expecting the Federal Reserve to make an announcement to start tapering its quantitative easing program. It'll be interesting to see how much the Federal Reserve is committing to tapering the program and over what time period as well. Last week, HAC did make some changes in its portfolio, increased its S&P 500 holdings. It exited its consumer staple position, exited its healthcare positions, exited its short-term bond position, increased its uranium sector position, increased its semiconductor sector position, entered into a position in the home builder sector, the industrial sector, and as well the materials sector as well. So quite a lot of changes in the portfolio last week. And if we take a look at what was happening in the markets last week, we can see that on a daily basis that, Monday was positive, Tuesday was positive, then we saw a negative day on Wednesday, then Thursday was positive, and Friday was positive. So it was a positive day, a positive week last week. And this is Thursday was the day that the GDP report was released, and we saw positive action on both Thursday and Friday in the markets. If we take a look at what was happening with the yield on the 10-year Treasury note, we saw Monday down, Tuesday down, Wednesday was quite a bit down, Thursday was up a little bit, and then Friday down. We saw the yield on the 10-year Treasury note down for the week, closing at 1.55%. If we take a look at the sectors of the market, as a reference, first of all, we have the S&P 500 here at 1.3% growth. The big notable sector positive was the consumer discretionary sector. A lot of this was from Tesla, which makes up approximately 14% of the consumer discretionary sector as represented by the SPDR ETF XLY. Now, on Monday last week, we did see Hertz come out and make an announcement about buying 100,000 cars from Tesla, which really boosted the stock market and the consumer discretionary sector last week. Technology was also positive, did quite well last week. Now, that would be expected in most cases with the declining interest rates helping to boost the technology sector. Healthcare sector actually did quite well. It's been lagging a little bit recently, so it had a little bit of a bounce. What was interesting is the U.S. energy sector was negative last week. Now, the Canadian energy sector was a little bit different because of some announcements being made, but overall, in the U.S. energy sector was a negative last week. So where do we stand with the markets right now? Right, the big news really that everybody's waiting for, investors are really taking a look for is the announcement coming out by the Federal Reserve this Wednesday about if it's going to start tapering its quantitative easing program and how much and on what schedule. It's going to be interesting how much they reveal about that, if they're just going to be very vague about the future as well. Most investors are expecting some announcement to take place because we've seen inflation becoming a little bit of a problem, and even the Federal Reserve has announced that it's lingering longer than expected and still expecting inflation to be a bit of a problem in the near future as well. It'll be interesting to see how investors react to the overall announcement. What we've seen typically in the past in a tightening cycle is the Federal Reserve tends to be behind the curve overall. And that's actually helped the stock market. So it's going to be interesting to see how investors actually take a look at the Federal Reserve. Are they doing enough to really control inflation as investors are perceiving it? Or are they lagging behind the curve, which might actually help to provide some support to the market overall? Now, we've just entered into this favorable 6-month period for the stock market. We saw a weak September for the stock market and then a strong October for the stock market. And this is the first full month for the favorable 6-month period for the stock market. It's going to be interesting to see how the market gets going in this period. Now, November and December together as two contiguous months from 1950 to 2020 have been the two strongest months of the year on a contiguous basis. That doesn't mean that they're going to be positive this year, but on a seasonal basis, they tend to be strong. It's going to be interesting to see what happens. Thank you very much for joining me today.